I'm Balaji. The SpaceX IPO has been on my mind a lot. Let's be real for a second. Usually the people who calculate orbital mechanics and the people who check their rising sun before leaving the house don't hang out. One group uses math to ensure a multi-billion-dollar rocket doesn't become a very expensive firework, while the other thinks that they should stay home because Jupiter is feeling a little spicy. But as we head toward June 2026, these two worlds are colliding. Elon Musk, a man who clearly understands physics but definitely loves a good meme, has reportedly set the SpaceX IPO for June. Why? Because Jupiter, Venus, and Mercury are forming a rare conjunction. It's auspicious. It's planetary branding. And to top it all off, rumors are swirling about a June 9th debut. 6-9. Get it? Because he's 55 years old, but internally, he's still a 14-year-old juvenile kid. But while we're laughing at the numbers, the terrestrial reality is a lot darker. This isn't just a celebration of space travel. It's a desperate race to the ATM. We're looking at a $1.75 trillion valuation. That's larger than Meta, that's larger than Elon Musk's own Tesla. It would comfortably beat Saudi Aramco as the biggest stock market debut in history. But as the saying goes, in space no one can hear your balance sheet scream. Before you buy the Mars dream, you need to look at what's actually in the box. In February 2026, SpaceX pulled a move straight out of the Solar City playbook. It folded xAI into SpaceX at a $250 billion valuation. Now, why would a rocket company need a chatbot, especially one like Grok, which currently holds a measly 3.4% market share compared to the 85% dominated by OpenAI and Google? The answer is simple. xAI is a money furnace. It's burning through $1 billion a month in cash. But it gets weirder. Last year, xAI used its equity to buy X, or formerly known as Twitter. So if you invest in the SpaceX IPO, you aren't just buying Starship, you're buying the 17th ranked social media site on Earth. A business that's been struggling with the persistent exodus of advertisers and users since 2022. It's a classic Musk maneuver. Use the moat of a successful company like SpaceX to subsidize the astronomical failures of his other ventures. You're essentially paying a $250 billion loyalty tax just to get a seat at the table. To justify that price, you have to believe that Grok isn't just a meme generator, but a frontier AI powerhouse like ChatGPT or Gemini, despite the fact that half of its founding team already got poached back by Google earlier this year. Let's talk numbers for a second. And I promise to keep the math less painful than an unfunny Elon Musk meme. The primary metric for tech growth is price to sales ratio. Facebook went public at 11 times sales, and people thought that was a bubble. Google usually trades around 5 to 10 times sales. SpaceX, on the other hand, is targeting a listing at roughly 94 times its 2025 revenue. Even if we use the most hopium-filled projections for 2026, we're still looking at 60 times sales. Just for context, this is significantly higher than Palantir, which currently has the highest multiple in the S&P 500 at 78 times sales. SpaceX claims it generated $8 billion in EBITDA last year. I hate to be the EBITDA guy, but in a capital-intensive business, that number is basically a fairy tale. EBITDA ignores depreciation. For most companies, that's fine, but SpaceX satellites have a useful life of only 5 years. You have to replace your entire revenue-generating fleet every 60 months. Think about that. If you actually account for the billions spent building Starship, which, let's be honest, is still in its frequent explosion phase.
For SpaceX, yet another spectacular setback, this one caught on camera by space enthusiasts in Texas.
And the cost of replacing 6,000 plus satellites, that profit starts to look very, very thin. You're being asked to pay for 2040 profits using 2026 dollars, while ignoring the fact that the company is currently a money to fire converter. This company is burning through money. The big sales pitch for this $1.75 trillion sticker price is Starlink. The narrative is that Starlink will reach 1.2 billion users by 2040. Now let's apply some terrestrial logic here. There are only 1 billion people on the planet who earn more than $32 a day. Just 1 billion. Most of these people already live in cities where wired broadband is faster, more reliable, and cheaper than a $120 a month satellite dish. Starlink is a brilliant tool for gold miners in Sudan the military in Ukraine, or just people living in a cabin in the woods. But it's fundamentally ill-suited for cities because satellites suffer from network congestion. If 10,000 people in a 2-mile radius all try to stream Netflix on Starlink at once, the speeds drop to dial-up levels. Realistically, there are only about 32 million households in the world who can afford the service and actually need it. We're already seeing the limits of that. SpaceX added 50% more subscribers last year, but their revenue only went up a fraction of that. Why? Because the high-paying American customers have all already signed up. To get more users, they have to lower prices in markets that can't afford them. It's a race to the bottom, disguised as a flight to the stars. To distract investors from the fact that they're overpaying for a satellite ISP, Musk has pivoted to the most sci-fi pitch I've ever heard: orbital data centers. The argument is that Earth is running out of space and power for AI. So what's his solution? He wants to launch 1 million satellites to act as a sentient sun, harnessing solar power in the vacuum of space. It sounds like a Christopher Nolan movie, but there's a tiny problem called physics. In space, there's no air. You can't blow a fan over a chip to cool it. You have to use massive radiators that eject heat as infrared radiation. To run just a handful of NVIDIA H100 chips in orbit, you would need a radiator array that rivals the International Space Station, the most expensive structure ever built by humanity. Musk wants to scale this to 1 million satellites. To reach the capacity he's talking about, you'd need solar arrays 4 kilometers long. It would be a giant, fragile sail, vulnerable to every piece of space paint and debris in orbit. And then there's the moon. Musk used to call the moon a waste of time. Now, it's the core of his IPO pitch. He's talking about building factories on the moon and firing satellites into space using an electromagnetic mass driver, basically a giant space railgun. The US Navy spent $500 million trying to build one on Earth and gave up because the heat and stress were too much. But apparently doing this on the moon is efficient. It's the Hyperloop all over again. The idea that the hardest, most expensive way to do something is somehow the smartest way. If you can convince investors that the laws of physics are just optional suggestions, you can put any price tag you want on these results. This is the part that should actually make you angry. How do you get a 1.75 trillion price tag for a company that might not be profitable? It's clear. Structural manipulation. SpaceX isn't selling the whole company. They're likely only floating a tiny 5 to 10% of the shares. By keeping the supply of the stock artificially low while marketing to every fanboy on the planet, they create what is essentially a massive supply squeeze. But here's the kicker. SpaceX reportedly made an early inclusion in the NASDAQ 100, a condition for the listing. The exchange is actually consulting on a new rule that would allow SpaceX to join the index after just 15 days, bypassing the year of price discovery required for everyone else. If SpaceX is added to the NASDAQ 100 and the S&P 500, every passive investor, meaning you, if you have a retirement account or a pension, will be forced to buy the stock at whatever inflated price the supply squeeze manufactures. As one fund manager put it, this is shameless structural manipulation. It turns your retirement account into exit liquidity for the insiders. We saw this with Tesla in 2020. The stock was added to the S&P 500 after a massive run-up, and it's underperformed the index by 20% since. The insiders took their victory laps, and the index trackers were left holding the bag. SpaceX is an extraordinary engineering company. Catching a 70-meter booster with giant robot arms is nothing short of a miracle. But an extraordinary company is not always an extraordinary investment. When a valuation is based on sentient suns, lunar catapults, and auspicious planetary alignments, you aren't investing in a business. You're investing in a cult of personality. If you think the laws of financial gravity are easier to bend than space-time, then this IPO is for you. But for the rest of us, the final frontier might just be a very long way down. I'll see you in the next one. Bye.